was such a pleasure having Pavel Fedorov, co-founder and chairman of Filipino challenger bank Salmon, on the pod. We dive into why the Philippines are such an attractive market for B2C fintech, how they go about scaling the business, their lending first strategy, and what we see get wrong about unsecured consumer lending in emerging markets. So much to unpack there. It was such a pleasure to have Pavel on the pod to dive into his journey from investment banking, Tinkoff, over to trailblazing the fintech ecosystem in Southeast Asia. Salmon has raised more than 90 million from leading investors, including IFC and the Abu Dhabi Sovereign Wealth Fund, and is poised to change the banking ecosystem in the country for good. Without further ado, directly onto the episode with Pavel Fedorov, co-founder and chairman of Salmon. And remember, you can follow The Enthusiast wherever you're getting your podcast, and make sure to check out our LinkedIn and Substack newsletter to always stay up to date with the latest episodes. Now, onto the show. Hey, Pavel, it is such a pleasure having you on the pod today. Thanks for making the time.
Thank you, Pat. Thank you. The pleasure is mine.
We've got so much to talk about your journey scaling Salmon in the Philippines. But curious, before we dive into your founding journey and the fintech ecosystem in Southeast Asia, I wanted to take a step back and understand a little bit better. How did you actually end up in the world of fintech?
Oh, that's a great question. Well, I started my career actually in investment banking. So, that was my first job back in 1997, where I joined Morgan Stanley. Spent about 13, 14 years with the firm. Most of the time actually spent doing telecoms, technology, media banking out of London, building the European franchise. And then I moved to Russia to essentially pursue an executive career. And at some stage, it became sort of very clear because the structure of economy is so much tilted towards natural resources. A friend of mine whom I knew socially under the name of Oleg Tinkov, he was always teasing me. We were doing such great stuff at Tinkoff. How come you're passing on this fantastic company that we're building? It tempted me, I made the decision to join Tinkoff as Oleg invited me to come on board. So I became the co-CEO of the company, was trying to build it into what it is, sort of international viable business with, we had the vision of this $100 billion plus capitalization. Unfortunately, all of this came to a bit of an abrupt end in February 2022. So I had to resign from a company and actually left to just think about what I want to do in life.
To many of us, Tinkoff is still such a big example on how to scale a challenger bank. It was really the first challenger bank. I had Dave Nangle from VF on the pod a while ago, and it was one of his main reasons to go into VC for fintech in emerging markets. Different mafias that were created that are now launching fintechs across the globe that came out of the Tinkoff void. And I'm curious, when you left Tinkoff and you were looking into different markets and the Philippines popped up, right? Why the Philippines? What makes it such an attractive market to build a challenger bank there from scratch? Because it's hard. Now, the opportunity has to be big enough for it to make it worthwhile. Right?
We had the benefit of actually looking at the world almost from the moon. And we're essentially encapsulated in Russia. We're looking at the outside world. We've done, I think, a tremendous analysis on each of a particular economy. So for us, you could almost say it was a combination of things. I think four or five key criteria. So first one, and remember, it's not just a technology business. It is a fintech, right? So it's a regulated financial technology business. I think the state of the regulatory regime, the willingness and ability of the regulator to embrace, shall we say, digital or modern banking. I don't want to call it digital, but much more of a modern banking vision and approaches, I think was a key criteria, right? So some of the markets, for example, we had to rule out because the regulation was way too manual or way too outdated or way too closed up, right? The second important variable, and we really didn't, we didn't want to go to a very developed market, be it the US, be it Europe, right? Because there are challenges not only on the regulatory side, but there are challenges with being an incredibly saturated place. Yes, you can still try to challenge that environment, but still we felt that the real opportunity lies with the markets where you have this really turning point of moving from an analog economy where it comes to using money to a digital economy. So that was a big tide that we wanted to ride, and as such, we focused really on the biggest emerging markets. So what was important for us is obviously the macro story had to be good, right? And you could do a business in a particular country, right? And you can build a very deep business. The problem if your currency moves 200-300% a year, right? It's very difficult, incredibly difficult to capitalize it. And I think the next variable for us was actually looking at the technologies that are changing the landscape. What would be the network effects? And one of the things, for example, why the Philippines was so high in rating was the ID standards in the country. So an average Filipino would carry with himself up to 26 different forms of identification, and pretty much, almost all of them actually could be used to open a bank account. And you can imagine the number of fake identities and fake IDs that actually travel in the country. So as such, the banks created this closed loop banking system. You can only have a credit card if you already have a credit card, and there was very high fence for the penetration of people from outside this, very, very much tip of the iceberg into the formal banking system, and especially in the part that deals with the credit. So that was a problem, right? And obviously, as the lower layers of the pyramid grow with the macro growth, and those are absolutely fine clients. In a country with a GDP per capita like in the Philippines, you have probably 30 to 35 million credit card holders. You only have 8. So that was an important thing. And obviously, where tech is changing this is face recognition technology. You don't need ID, almost. So you can identify fraudsters fairly quickly. And for us, that was a game changer. Introduction of the single national ID in the Philippines was a game changer. So there is a multitude of network effects which are being unlocked. And I would say the last variable was really the quality of the legacy banks. They could be great, right? Many of them are actually great at what they do. But the way we look at this is almost like from a bit of a futuristic perspective. We just go to to Google Play or Apple Store, and we'll look at the app rating, right? That's it, right? So there are 2 emerging markets in the world where the biggest banks in the country are rated something like 1.6, right? Those 2 banks from the big emerging markets, that's really the Philippines and Nigeria. Right, that's it. You go to any other economy, you really have very well-run legacy banks, and some of them are actually quite competitive. You look at Brazil, you look at Mexico, you look at many other economies. The biggest banks that are still well established, they're very well rated. So when we looked at the world through these lenses, we really had for ourselves the markets that we really earmarked as highly attractive. In no particular order, it was the Philippines, Mexico, and Indonesia. So that was the thinking. And one obviously, when we had a choice of actually just picking market, we said, listen, the Philippines. And by that time, we actually, as Tinkoff started building the business in the Philippines, the time is ripe. So in July 22, myself and my partner, George, who was actually employee number 1 at Tinkoff back in 2006, he's architect of the many businesses at the company. And Tinkoff's employee number 1 in the Philippines, Rafi Montemayor, who spent, 9 years at HSBC doing credit cards, who said, listen, let's shake hands. Let's create Salmon. As you know, Pat, Salmon goes against the stream. It goes against the grain, challenges conventions. So let's just do it on our own, right? Especially with all the access to the talent pool that we have available. So in a way, it was a long thought process. I'm actually convinced that Philippines is probably for the next 3-5 years is going to be one of the, if not the single most attractive market for building a challenger bank.
No, this is fantastic, and I love the name. I wanted to double click a little bit more on the regulatory piece. Oh, look at this beautiful credit card. Love it.
And we have the scales. You can see it, right?
I can see that. No, love it. Amazing branding. I wanted to double click a little bit on the regulatory piece because it's always huge. Obviously, when you go into a financial services ecosystem, you're reliant on a certain regulatory environment. So I'm curious, what would you say is kind of the main make or break regulatory aspect that you are looking for when you're starting a fintech in an emerging market? What would you say is the main thing that should be in place for you to consider it?
Yeah, I think it's a great question. But for us, it's important to understand. And I think it's actually in a very fundamental premise of what we're building. We're not building a fintech. Okay, we're building a licensed bank because we believe that it's incredibly important to have the regulatory dialogue from day one. You don't want to be in a situation where you've grown too big and the regulator comes to you and says, okay, what's going on? And we don't understand it, right? You don't want to be playing in a gray regulatory area for too long, right? One of the visions that we had, why the Philippines was chosen, is actually coming to the regulator day one and saying, listen, we want to become a licensed bank, want to be fully regulated by central bank, want to be very transparent to us what we do. And that actually just, breeds mutual trust. and allows us to grow, to play our playbook. And our playbook is essentially, relatively simple, we could describe it. So it's building a scalable and very profitable lending machine and solving the difficult part of the equation, which really is getting access to financing to tens of millions of Filipinos and funding this long term with the deposit base. The depositors would be coming from a somewhat slightly different part of the market. As our experience shows, the overlap between those two actually would be quite small, especially in the initial stages, in the first 3-5 years of rollout of the business. But the more you grow, the more the cross-sell machine works. But that is the vision. Right. So as such, I think the openness of the BSP, the Central Bank of the Philippines, for embracing us as a licensed bank, and we had to go obviously through hoops and loops, just passing the fit and proper test, explaining our vision for a market, explaining why we're adding value. That was very, very important. I think that was the first tick mark for us. I think the second part of the equation was really, shall we say, a place of financial inclusion on the regulatory agenda. By many metrics. Seriously, look at the penetration of unsecured consumer lending to GDP. Philippines is like 7%. You go across the border, you go to Vietnam, that number is 8 to 10 times higher. Thailand, same story. There is no reason why Philippines should be different. But the regulator actually realized this. They said, okay, let's get something changed. And as such, it's an incredibly important part of all the regulations that are put in place. The third important variable when it comes to regulators sort of understanding the world is, I would say, I don't want to say the word fair, but I think a systemic approach to regulating the sector is an incredibly important part of success. So a regulator that basically sets the rules for the sector, for the banks, the rules that are followed, but the ones that are universal rule of play. That to me, this has actually disproportionate impact for the quality of competition, for the quality of customer offering, for the speed and velocity of development of the banking system. And we're seeing this in the Philippines. I think we're blessed to have a very progressive, very systemic regulator that's so much focused on the financial inclusion. So that's I think to me that's the foundational thing. And then yes, you could talk about other things further down the road, like open banking. What do you do with this? But to me, you have to get the foundation first into sort of right in the first place, and then you can talk about the future.
Makes sense. What does a standard Salmon customer look like? What profile do they have? Do they have a bank account? Are they underbanked? Are they unbanked? Just curious to unpack that a little bit more.
We currently have one product, right? Or just one category of products, and these customers are going to be very different from our debit customers, right? Because in many ways, there are parallels to the Team playbook, right? Just you start with building a very large lending business that's focused on really just penetrating segments of the market where the big banks are not playing. Philippines has a population of 115 million people. Okay, call it 8 million of them have credit cards. Okay, but probably I would say the next 25 million people that are out there that we would define as probably underserved. That is our target segment. When you walk into a store, it's not that easy to get a loan. So you have to fill some stupid forms. You have to bring your little notice from your employer saying that you have this income. You go to a regular bank, it's going to take you 2 months. Okay, we provide loans like in minutes and 20 seconds for you to get scored. And it's offline, and online it's even quicker. For me, that's very, very important part of the equation. Customers that are underserved by the legacy banks are basically our customers, right? And where we're going to talk about our debit customers, you could say that this will be a somewhat, shall we say, a more aspirational segment of the market. I think in Southeast Asia, what we saw is because of the, shall we say, the historic legacy. In Japan, they call it sarakins, right? Because of the shark loan lenders, and people tend to kind of box people in and say, okay, these guys are like the payday lenders, these guys are the neobanks. The reality is that where we're balancing is that we're few notches up from people who are really, shall we say, still they remain. Especially in the formal sector, right? Like 5-6 schemes or a very aggressive payday lenders that are operating in the market, and it's very difficult to regulate them away. The only way to do it is to introduce the good guys like us. So we're coming in with better product, we're coming in with lower rates, we're coming in with far more sustainable product offering to the customers. That's what we do on the credit side. And on the debit side, we'll go and compete with a very disruptive debit product, but that will be actually addressed at a very wide audience. So it will be mass affluent market, that will be very active.
I want to talk a little bit more about how you get that flywheel going on the product mix. And you're starting with credit, which to me is very interesting. Credit, of course, is a little more risky. How do you know your customer? How do you underwrite correctly? So tell us a little bit more about that and how you're leveraging the experience you had with Tinkoff there, especially.
Listen, I mean, it's a multi-billion-dollar question. I'm sure I can disclose everything in the podcast. Well, we have to go offline for a bit. Answering this seriously, the reality of the market today in most of emerging markets is that you really cannot rely on the existing credit bureau infrastructure. The credit market infrastructure is deficient in many ways. Yet many network effects are happening, right? So when we actually start the business, we said to ourselves, the first thing we need to get right is to be able to score people profitably, so we can underwrite them in a way that actually allows us to make returns despite the lack of information, despite lots of asymmetric information in the market, despite sort of many other things. And I think the answer here really lies in this, which is a mobile phone. The mobile phones today are much better predictors of people behavior than, where they live, what they do. So we have built a very extensive AI-driven, comprehensive scoring model that is based on alternative data and customers' data where it comes to predicting their behavior from their mobile phones. Right. So when the person comes to us, for example, offline, so by now we're present in more than 2,000 stores across the nation. If you come and you just try to take a loan from us offline, you will answer a few questions from a questionnaire, right? I mean, we'll go to essentially all the alternative data providers that we have access to. We'll work with the customer's consent with the mobile phone, just to obtain all the relevant data points. So we get tens of thousands of data points about every particular customer, right? And we're running the machine that allows us to score people sort of quite profitably. It is a machine that is evolving. I think the real answer to this is that, as we like to put it, there is sufficient information in the market for scoring everybody in the Philippines. The only problem is that information is often in various places and is not connected to each other. So dots are not connected. What we do, we connect those dots. I think one of the probably least efficient users of this information today in the Philippines are some of the big retail players. They know so much about their customers, but at the same time, this data is not being leveraged. And the reality is that the single most important link, the way of monetizing customer relationship is actually through credit. Right. Giving ability to people to buy more, go after their aspirations is actually one of the key things. And I think this is the information that's not fully leveraged. And we have by now actually a very large number of retail partnerships across the country that allows us to leverage the alternative data, mobile device data, retailer data, transactional data, and we're pulling all of this together in what is a fairly clear picture for us. So we're making money on pretty much on every first loan that we're making to customer, and that's critically important for sustainability.
So let's go through the process. So I'm a potential Salmon customer, and I go into a retail store. I'm buying a new phone. And what's your average? Like, how much can you finance? What's your average loan amount? And how quickly do I get that immediately at the checkout, I suppose? And then what is the ways of me paying that back if I'm not yet a Salmon customer? I'm creating a profile right away. Let's talk a little bit through kind of the acquisition channel and how it works in practice.
So we have actually two legs, right? So we have online and we have offline customers. And we created this flywheel that allows us to leverage both options, both channels to acquire and minimize our acquisition costs. For example, we're scoring people for online acquisition, but for online acquisition, your approval rate usually is not that high. Okay. But still you have a layer of customers. That could potentially be considered for. So what we do actually redirect these guys to our offline footprint, and that's important. And similarly, when we're in a number of offline locations, we have a way of redirecting the customers to our online offering. So we offer the products sort of both ways, and we created this flywheel where we basically recycle the flow, incoming traffic of customers in a way that actually allows to sort of to minimize the CACs and maximize efficiency, right? So if you're talking about the offline process, it's actually fairly simple. You walk into a store. And our agent that comes to you and says, okay, so you're looking to buy something. I mean, it could be something as small as an RN, could be a TV, could be a washing machine, could be a piece of furniture, could even be shoes, right? And our customer comes to you and says, listen, how would you like to buy it in trade? And then we essentially, we fill in like a very simple questionnaire. So it's all done very efficiently. It's very done on the sales ambassador on our agents' phones. So we have a special application for these guys. We take one photo of a customer, one photo of the ID. So no red tape. And as you're answering the questions, in parallel, we're getting all information about you from all the sources that we have, putting a complete profile You download our app as well, so we get quite a bit of data through your download of the app. We pull it together in a complete picture, and then in 10 minutes, boom, you're done. In 20 seconds, we essentially give you an approval for a loan. Pat, you would score highly. Exactly. And then in essence, I mean, you can go to the checkout counter with a QR code, making payment. Yeah. And this could be as flexible. The lowest loan we can give, so it's fairly low. But I mean, you talk about few hundreds dollars. I mean, you talk about the higher side, right? Yeah. And those are proper consumer loans. So we actually give it to people for from 4 to 12 months. So the average is something like 8 months. Actually, proper consumer lending. That's the beginning of the journey. If you're a customer, if you're a good paying customer, and we'll look at your sort of behavior, amplitude data, you will look at your behavior in our application, we'll look at your other stats, and we'll probably come to you for a repeat loan later on. And that's that would be a cash loan, or that could be another product. For the online product, we have this product which is called the revolving credit line. It's almost like a virtual credit card. It's just structured differently for the right reasons. But it is a revolving credit line that's available to you in app. It's actually much better than a credit card because it's super safe. Nobody can steal the number of the card. I mean, if somebody hacks into this, it's actually our money from our limits. It's very difficult, for people to steal your cash balance. So the way it works is that you have to be paying certain minimal amounts, and you just need to stay current. As long as you stay current, and we will keep on increasing your limits, looking at your other behavior, sort of behavioral characteristics as well. And that could actually go up fairly high, right? So we're always testing the boundaries, running our tests, and obviously these numbers for our well-paying customers are actually increasing quite rapidly. In essence, the vision is building a model of revolving revolving portfolios, and that will allow us to keep on growing our customer base. Even if we stop the new issues, new disbursements, we'll be able to grow our portfolio. So revolving credit line is going to be the major product that we have that will be complemented by credit cards next year, and that will be we'll decide which way to go, right? Because I think an important thing about the Philippines, it's very much going down the path of QR codes. A very, shall we say, China/Japan model, because central bank introduced in the summer of 23 a uniform QR code, QRPH, right? So all the proprietary QR codes for like the big players like Gcash, Maya, now you actually have a single QRPH, which is accepted in 600,000 merchants across the nation. Our product, the revolving credit line, actually runs on QRPH, so it makes it incredibly easy to pay pretty much anywhere. Parking, grocery, proper stores, pretty much anywhere, and that's what makes it so convenient, so unique. Credit cards, it's a bit of a question if we're going to do it. Probably we'll do it, but to us, I think there is no clear question where the market is going still.
Yeah, understood. And as you're building that flywheel, now you're launching also debit to kind of fit into that, and which is then going to finance more your lending side of things, right? And this is really a critical part of scaling this, because at the moment you're using kind of portion of the money that you've raised on balance sheet to then finance the loan product, right?
We're using equity partially, but we're also using wholesale funding. And I think one of the peculiarities of Southeast Asia is that the debt markets are not very deep. You actually have to work very hard to getting to the debt financing. So I mean, I'm talking in comparison. I'm comparing that to the United States, comparing to Europe. The markets are unfortunately rather shallow, and I think also as debt providers, they look at the credit profiles of the companies they give money to. And needless to say, we're not a consumer lender. We are building sort of a modern bank, a disruptive challenger bank that will sort of do both credit and debit. A lot of investments actually going into debit cards and the core banking system and the application. But obviously, when people just say you have a burn that's directed toward a product that's giving no revenue, but that is actually a source for long-term value. So the debt markets are not very deep, right? And I think the long-term vision for us is obviously just to get funded with deposits. We'll be able to hopefully start getting online deposits as soon as sort of second half next year. By now, we're funding ourselves with offline deposits and with wholesale funding, but the aspiration is to build the bank that will be sort of self-perpetuating through the acquisition of deposits.
That's the only way I feel to do it sustainably. When you're building a challenger bank in emerging markets, you always build like the whole infrastructure. And we're talking about the KYC piece, about the data information piece that is all scattered around, and there's no universal credit score. Is that where you see there's also an angle there that you say, hey, your credit scoring is going to be so sophisticated that you can use that for other financial providers in the ecosystem? So
I think the real machine that we're building is our ability to score people, right? I mean, that is a differentiating angle, especially the market, which is so full of asymmetric information
Right.
issues, right? The market that's so constrained, right? The market that has such a big threshold towards actually building this, right? Building credit is most difficult, right? I mean, you need to be able to really go for it. Day one, when we start providing loans I was on November 22nd, 2022, we had like 50-60% delinquencies in day one because you know nothing. And it's incredibly difficult for large bank institutions to actually embrace that type of volatility. Think of your year-end KPIs. What's going to happen if you have high delinquency? But I think what we're solving for is really, so we have a very strict NPV-driven framework. So we're not afraid to experiment. We're not afraid to embrace a challenge. We're controlling the risks where it comes to really educating ourselves on the small volumes of losses. We're happy to accept these losses. The question is, are you learning from those losses or not? That is obviously a very difficult journey in traditional banking institutions, and that's where we come in. So that basically what allows us to build this machine, and sharing this machine outside is incredibly costly. I think it's much easier for us to open our doors to new capital and then allocate this capital with superior returns using our credit engine. So just put things in perspective, we became a licensed bank in January of this year, right? So officially now we are the fastest growing bank in the Philippines. We've grown something like 9x in terms of balance sheet from beginning of the year, and the highest ROE bank in the country, like with 62% ROE, right? I mean, that makes it very difficult for us to think about separating part of credit engine, giving it to somebody else, right? Would rather really grow the balance sheet. That is an incredible, a multi-billion-dollar value creation opportunity. Yep. Not only for us, but also I think for the customers. So the consumers feel that credit is becoming more accessible, and I think we're very much going to be playing a key role in unlocking that credit too.
I love this, and as you're improving the whole financial services ecosystem in the country, which has been shallow and deficient, I would say, definitely by legacy players. And is the Philippines big enough for that? Is it big enough to build a multi-billion-dollar business, or do you say like this has to be a regional play in the long term for you guys?
Yeah, actually, I would like to answer this question with two yeses, right? So I think in terms of the Philippines, right, so sole market. I actually think it's a huge space. I think people, especially when you talk to, I have great respect for venture capital community. We have some fantastic investors, but I mean, once in a while, you sit down and sort of people say, okay, are you going to plant a flag here, plant? Yep. That's not objective, right? I mean, look at the world. Look at the single most successful fintechs out there, right? And to us, if you talk about the playbook, it's Tinkoff, it's Nubank, it's Kaspi. All of them have really created sort of 90% of shareholder value by being focused on one market. Right. The Philippines has GDP today of $500 billion. That is a huge number. If you talk about the unsecured consumer lending, we actually have a great story. When we created the company and we're doing our first round, we're growing with our own money, and then at some stage let's get some outside money in. So I remember the pitch book we had, which was saying, okay, this is official BSP statistic here, 2021. Unsecured consumer lending market in the Philippines is like $13 billion. Okay. And I remember we had the forecast for 2028 saying, okay, this market, we call it the aggressive scenario, could be $28 billion by 2028 or 29. Now, 2 years passed, less than 2 years passed. The market is $23 billion. So, and it's actually growing at a pace where people are now looking at the appetite, at velocity, and all the positive regulations are being put in place, and really like network effects starting to play the game. I think we're looking at, call it $80 billion plus market by 28, 29, if not more. So this is a manifold increase. And imagine us, okay, let's not be aggressive. So let's say we just only have like $2-3 billion loan book, and that's a conservative number for 28, 29 in terms of what we're building. That is a multi-billion-dollar in it by itself. And this is strictly unsecured consumer lending. I'm not talking about the transactional side of the business. I'm not talking about the debit card that we mentioned. I'm not talking about other segments of the market where actually we are looking and what will be playing, because you have a multitude of others, shall we say, more collateral heavy parts of the banking system that have not been served as well. When you try to get a used car in the Philippines, you'll be paying a 30% plus APR. And this is fully collateralized piece of financing. There are a few other, called 3-4 segments at which we're looking and saying, okay, guys, this looks like an incredible opportunity. I'm not talking about insurance market is not disrupted at all. There is a real depth that you can be adding and building this as a multi-billion-dollar company that is solely focused on just disrupting this market. So from another perspective, the Philippines banking sector today is capitalized altogether. It's like $35 billion. Okay, call it 28, 29, probably will be $50 billion plus. My view, my conviction, in a market like this, you'll have, call it quarter, if not more, of the market in 28, 29 being owned in terms of capitalization by the challenger players. That is the scale of the opportunity. And yes, you're right. There is Indonesia next door, which is incredibly tempting, and my hands are scratchy. You have other big markets next door, but I think focus is of paramount importance. So let us just show, like for next 12 months, want to have like a very flawless execution in terms of just really proving the world that we have a differentiated execution story for the Philippines. And then we can look aside. But before that, we really want to make sure that we were building a scalable and strong team.
Makes all the sense. As you were saying, Kaspi built an amazing business by being just focused in one country of 20 million, value of 25 billion on Nasdaq is not too bad. What you can achieve in just one market is outstanding. You mentioned the investor piece, and certainly you're still on a journey of raising more capital. And what do you think VCs get wrong about unsecured consumer lending in emerging markets? What is that they don't understand about it? Because it used to have quite some stigma.
That's true. And I think that's actually, and we had a couple of discussions, I don't know, very similar to the question that you're asking, because there are people say, listen, unsecured consumer lending, emerging market, what you're doing with some of the customers, you're too blue collar. The reality of the world is that you don't get white collar in an emerging market. You want to go deep. You want to actually just build the products and understanding of the whole underserved layer part of the pyramid, right? And eventually, in 2-3 years' time, you'll have a separate solution for the top of the pyramid. You'll have sort of a separate solution channel for another part of the pyramid. But you really need to build a solution for the opportunity, a scalable solution for the opportunity, right? People, especially back in, call it 2021, and they often get enticed by the view of a bank A or bank B doing a very sexy debit card, right? And raising lots of deposits. And then the question is, what happens next? We are strongly convinced that for business to be sustainable, you need to be you need to be consistently sustainably profitable. You need to be realizing superior returns out of client relationship. It needs to be a deep relationship, and the best way to monetize it is through credit. That's what we do, basically. So for us, I think you have more questions asked by the investors when you're actually going, at the humongous, my view, consumer lending opportunity. People say, okay, are you like a consumer lender? Is there a stigma historically or not? But my view is that those questions are being asked only by people who do not understand the playbook, right? Our playbook is that of Tinkoff. Our playbook is that of Nubank. We're building essentially a very profitable, very sustainable machine, and we will be essentially moving towards building one of the most exciting brands in the country, and again, a great transactional product which will disrupt the market in so many ways. But it's a connected playbook. You really cannot build one without another. And I think understanding that link and building that link in a way that actually allows you to have a strong and appealing and very aspirational brand in the market is absolutely key. So that's what's happening. Raising capital in this context obviously is never easy, but we're blessed to have been supported by tremendous guys. So the Sovereign Wealth Fund of Abu Dhabi, ADQ, now Lunate, International Finance Corporation, and many other sort of prominent Filipino investors. So it's a fantastic group of supporters, which allows us to actually just keep on taking business to the next level. But you're right. We had to not only raise the capital against all of these prejudices, we actually had to raise it in 2022, 2023, which is an absolute nuclear winter for for any startup, for any venture. So
for sure, and executing on that, we're in a completely different environment with the capital markets, and you got to show those proof points and those milestones that you're hitting a lot earlier and in a less risky way than it used to be, and that in a space where you got to go outside the risk curve to really get your underwriting going. It's incredibly challenging. So really, chapeau to you guys and what you
think about it.
And before we close, there's 3 questions I'm asking everyone on the pod in a fast speed round. Would you be ready for those 3 questions? So the first one is, who's an entrepreneur you admire and why?
That's a great question. Well, listen, I think I could talk about abstract figures. To me, it's more important to probably talk about the person actually witnessed as a great entrepreneur. And to me, it's obviously Oleg Tinkoff. Right. I think the reason is that it's incredibly difficult to be an entrepreneur. Just draws so much resistance from the rest of the environment. Whichever environment you're in, it's difficult enough to be an entrepreneur in the developed market. Doing this in a market which is as challenging and as difficult as Russia is an order of magnitude higher. Yeah. And doing this, call it 5 times in a row, I think it is even a greater challenge, an order of magnitude more difficult task. And succeeding at that was really a testament of his entrepreneurial talent, right? And the resilience, power, vision, all of these things coming together was obviously a great mentorship for each of us in actually just creating an aspiration to run our own business and essentially sort of build something on our own. I think that was a turning point in looking at the entrepreneurial community, entrepreneurial path for many of us.
Fully agree. Second one, what's the best piece of advice you've ever received and would like to pass on to others?
Burn the ships. I think the best piece of advice. I mean, when you're building a venture, don't be half-hearted. Okay, go for it with everything you have. I mean, I'll be very blunt, right? I mean, I've invested not only lots of my time, needless to say, right? I'm blessed to have a family that supports me in moving to Manila and sort of rolling up the sleeves and actually doing this. 300% of my time. I've invested lots of my personal money in Salmon, right? So, but the whole idea is don't try to be half-hearted. Don't try to build a venture. Don't try to build a quote unquote, sorry, in the bad sense of the word, but startup. This game is about you committing your real skin to this game. You landed on this continent, burn the ships afterwards, and you have no other way of just making this a successful and sustainable business. And feel the wall against your back, and that actually will drive the very best instincts that you have.
Talking about pressure.
That's life. Life is short, play hard.
Fair. And last but not least, what are 3 keywords that describe a successful business in your opinion?
The first word is loved. Okay, you want to be loved by consumers. And without you creating a product that really have a strong love feeling for, right, you'll not succeed. So, and that's why we're actually putting everything we have into creating a product like this. So being loved is very important. Secondly, being emphatic is very important. So you gotta go for it. So you gotta be decisive, bold in what you're doing. You don't want to be sort of wishy-washy, but you want to be very, very decisive in pursuing what you have in front of you. And as a business, the business needs to have the sense of decisiveness to it. And I think the third word is a bit more pragmatic, but you need to be profitable. You need to be sustainable, profitable. You need to be making money. I'm not a great believer in stories to be told to investors. I'm not a great believer in businesses that just exist because they perpetuate this fundraising. Listen, we're going to have one more fundraising round. Done. That's it. We don't need many money. So we're going to raise 25, and that's it. We don't need money anymore. We want to be a self-sustaining, profitable business. And I think every entrepreneur needs to understand that the real judgment of success is in the eventual bottom line that the business brings. So I think those are 3 words.
Of decisive.
Loved, emphatic.
Thanks for those. Really appreciate it, Pavel, for making the time to join the pod. So much to unpack there. Amazing journey you're having there with Salmon. So much more left in store for you guys as you're building this out of the Philippines. Is there anything else you would like to share with the audience before we close?
Pat, I would like to thank you. I mean, I think it's been a tremendous discussion. I think there are very few people that understand emerging markets, fintech, like you do. I'm actually very happy to be making that change. I mean, personally, I'm into the lives of millions of Filipinos. I think it's a great opportunity and blessing in life. So, let's try to make the best of it. So Perfect. Hopefully we'll see you soon.
Yeah, thanks so much, Pavel. Great note to end up on.
Thank you so much.
Thank you for listening to the Enthusiast podcast. Make sure to subscribe wherever you're getting your podcasts to always stay up to date with the latest episodes. And if you enjoy the work we are doing, drop us a review or give us a rating. This show is produced by me, Patrick Alex. Also, a big shout out to Constanze Ulreich, who is leading our newsletter efforts, and much more. Title music by Stock Studio called That Funk Show.